Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. Here are a few images from my life in a remote village in Thailand. These are available on my website superiorprofit.co under the images page. I am Sagar Nandi, active trader in multiple markets. Disclaimer, this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use Q for my trading. Q runs on Metastock and TradeStation platforms. Let's start with charts of instruments that often move the market. Dollar Index ETF UUP. In the weekly, the backdrop color is remaining bullish. It is bullish since it displayed a bullish indecision at the low. Looking back, I predicted that UUP would go up from here. It did that. Here I predicted that it may pull back and create a higher low. It did that. Here I once again anticipated that it would create a higher low. It has come down and it has stopped at the yellow direction line. It actually regained the yellow direction line and it also has a trend line support. I am continuing with my view that UUP is more likely to create a higher low and go up from there, then come down and create a lower low. This week it pulled back. That would have helped the market to go up. If it goes up by creating a higher low, that may put pressure on the market. The other instrument that I check every day that has tremendous influence on the market, that is Megacap Custom Index. Last week it was bearish. This week it reversed sharply, closed with a bullish shape, bullish color, weekly backdrop, stopped short of making a new all-time high. In the daily it went up sharply, stopped right at the trendline resistance. I'm anticipating it to go up, break the trendline resistance in daily, create a new all-time high, and then decide whether to come down or not. I'm expecting it on Monday or Tuesday to make a new all-time high. And this has tremendously influenced the market this week. It is outperforming the market. Q market breadth internal health check. Usually the market follows the internal health, not the other way around. I tweeted the market breadth charts already. Let's have a look at that from the tweet to save time. By the way, the total view is calculating again. That's good. All the breadth charts are calculating again. This is total view, the broadest view of the market. Earlier, it displayed a series of Bango signals, that is irrational exuberance. The last one came here. Soon after that came a Hindenburg alert. The first one in yellow color is an alert. On Friday came a confirmed Hindenburg if we combine NYSE and Nasdaq together. Notice that from the low, where after Phoenix came the large accumulation count of 6, the largest possible accumulation count of 6, total view custom index has steadily gone up even this week. However, internal breadth is not strong. From this irrational exuberance point, percentage of stocks above 50-day moving average, the yellow line here, has steadily come down. It has come down a bit again this week. The other oscillator that I use regularly, thanks to Dr. Jeffrey Scott, I started using it after watching his videos, 3-month new high low. This line, that also peaked at the irrational exuberance. After that, it has come down steadily. This week, it has come down even more. That means though the market is making new all-time high, for example, QQQ made a new all-time high on Friday on a closing basis, internally, many stocks are coming down. So if you are not holding the mega caps, if you are not holding QQQ, market is not looking so bullish, not across the board. That is a concern. At the same time, if there is rotation coming up, that is, if mega caps start to underperform and the stocks which fell down earlier starts to outperform, then the market may continue to do well. It is not required that it will come down. However, seeing the Hindenburg alert is a cause for concern. Why? Because no big crash has happened without a Hindenburg signal, confirmed Hindenburg, though every confirmed Hindenburg does not lead to a large crash. But because every large crash is preceded by Hindenburg confirmation, it's worth to be watchful. Now, as I mentioned, this confirmed Hindenburg has come only if we combine NYSE and Nasdaq together. What does it mean? Okay, before that, just one more thing. If we see where is the strength in the market, growth is outperforming, not value, and small cap is not doing well. That means large cap, mid cap, large cap, mega cap growth are doing good. If you are not holding those stocks, if you are holding small cap or mid cap, they are not doing so well probably. Okay, let's drill down from total view, the broadest view, to the two broad pockets of the market, that is Nasdaq and NYSE. First thing to note is that the Hindenburg alert that came a few days ago, that came from NYSE. That is where Hindenburg is traditionally calculated, and on Friday's Hindenburg came not in NYSE but in Nasdaq. That's why I mentioned if we combine together, we have a confirmed Hindenburg. We don't have a confirmed Hindenburg in each of NYSE and Nasdaq. And again, though the Nasdaq composite IXIC and NYSE composite both are steadily going up. Of course, Nasdaq composite is stronger because it is having all the mega cap stocks. Both are quite strong. Internally, once again, we see the stocks are pulling back. That is true whether you look at percentage of stocks above 50-day MA or look at 3-month new high low. If we look at the major indexes, we see the same weakness across the board for Russell 2000, Nasdaq 100, S&P 500, S&P 1500. Under the hood, stocks are selling out. Dow Jones Industrials has very few stocks. I may omit calculating the breadth chart for that from coming weeks. All these breadth charts show without doubt that under the hood the market is not as strong as is seen from QQQ and SPY. From internal view, let's now switch to external view for the market. This is how most people around the globe see the market. Let's start with a look at the performance finder. I have the market ETFs here, market cap weighted, except DIA is not market cap weighted. Now, whether market cap weighted or not, these two are not market cap weighted, or if we look at the mega cap ETFs, everything went up this week. However, later we'll see that for non-market cap weighted ETFs, the gain happened only on Monday. After that, it practically did not move. I mean, for the ETFs that are not influenced tremendously by mega caps, they did not do well after Monday, though for the week it ended higher. Also notice that DIA and MDY, that is mid cap in ETF, and Dow Jones Industrials, as well as small cap ETF IWM, is actually down over 2 weeks, 3 weeks, 4 weeks and 5 weeks. It's much weaker. And if we look at the equal weighted QQQ, QQQE and equal weighted S&P 500 RSP, those are also down over 2 weeks to 5 weeks. This week those went up, but again the gain would have happened only on Monday probably. Whereas mega caps are super strong across all these periods. These are weekly intervals. And that explains the strength of mega caps, explains why SPY and QQQ are also strong across all the periods. Of course, QQQ is mostly influenced by mega caps more than any other ETFs here. Let's look at these charts now. SPY last week had a bearish headwind and bear release signal. However, looking at the extremely overbought condition, I suggested that the market would recover, and exactly that happened. From the extreme oversold condition, where in bucket analysis, for example, it rapidly went up. And we can see not only on Monday, but throughout the week, SPY continued to go up. It is in such a place that even if it starts to pull back from here, or if it creates a false upside breakout and pulls back from there, it will not be easy to short it because it has many supports nearby. SPY is just short of making a new all-time high. QQQ closed with a very bullish shape candle in weekly. On a closing basis, it made a new all-time high at regular market hours on a closing basis. As of 4 p.m. Friday, it did not breach the high of this candle. However, you can see from here, this was the closing price and this is the last price. On the last price basis, it has comfortably breached the high of this candle. So it has not only made a new all-time high on a closing basis based on the highest price, also it has made a new all-time high if we consider market move after 4 p.m. on Friday. That is very bullish. It is clearly outperforming all the other market ETFs, and the reason is also clear because it is most influenced by the mega caps. DIA, the weekly candle is neutral in shape. It's not so bullish like SPY QQQ. And as I was saying, most of this week's move came on Monday. After that, it practically did not move anywhere. It is underperforming the market. In recent weeks, it did not make any all-time high. It is possible that it will try to do that next week. IWM, once again, not a bullish shape candle in weekly. Here we can see the major move happened on Monday, but after that also it slightly went up, underperforming the market, far from the previous high. And let's look at the mid-cap ETF, MDY. This is the first ETF we are seeing that has bearish backdrop color. It also has a bearish indecision this week. Majority of the move happened on Monday, and after that it actually came down, closed lower than Monday's close, severely outperforming the market. Sorry, severely underperforming the market, cannot outperform, severely underperforming the market. But still, even if it is underperforming the market, if it comes down from here, it's not possible to short because a trend line support is immediately nearby, and then there is the white direction line. It will take a while before we can try to short MDY. However, if we look at QQQE and RSP, let's start with RSP. Here the weekly backdrop color is remaining bearish, very severely underperforming the market. Not at all looking like SPY, isn't it? So equal weighted S&P 500 is still having bearish backdrop, but here also is not possible to short because yellow direction line and trend line support is nearby. And surprisingly, QQQE, equal weighted QQQ, is also having a bearish backdrop color with bearish indecision, far from the last all-time high. Still, here also we cannot short easily because the yellow direction line and trend line support is nearby. In any case, across the board, the market did go up, though under the hood we can see clearly the move was largely driven by the mega caps. QH has bucket analysis, pinpoints reversal points with remarkable accuracy, and proof pudding is in the eating. Last week, using bucket analysis, I suggested that the market would not come down, though last week was very bearish. Exactly that happened. Stocks recovered sharply across the board. It also has sector industry stock breadth, shows where the market came from, where it is now, and where it may go next. Bucket analysis. Last week in the market recap, I showed that the percentage of stocks in the lowest bucket, that is below lower Bollinger Band, was hitting extreme oversold level, 30-40% level, and based on that I hypothesize that the market would recover. It cannot remain so oversold for long. Can remain so in exceptional cases, but usually it recovers, and exactly that happened. Now percentage of stocks in the lowest bucket is only 4.6%. A lot of stocks came down and then recovered from near lower Bollinger Band. But overall, the market is still bearish, isn't it? 58% of stocks are still below mid Bollinger Band. That again shows that though QQQ SPY are very high, under the hood many stocks are not doing so well. It cannot be strong across the board if 58% of S&P 1500 stocks are below mid Bollinger Band. It is possible that the stocks that were underperforming earlier, they will start to outperform, and therefore even if mega caps come down, the market may continue to do well. Over longer period, we see sector industry stock breadth is bearish. We are still in a declining market over 1 month and also 10 days. This week was an oversold bounce, but Thursday, Friday, under the hood, market is not weak. It is not bearish also, it's neutral. Where it will go next is difficult to assess from the analysis we are seeing so far. It's possible that the stocks that rallied, like AI related stocks, mega caps, they may pull down. They are extremely overbought, and the ones that were underperforming, there are excellent fundamental stocks giving buy setups or are near buy points, they may start to go up. There are even stocks with high dividend yield giving nice setups with strong fundamentals and in great industries, strong industries. We'll try to find some stocks like that. QFinder technical breadth, we only profit by buying stocks going up or shorting stocks coming down for directional trading, and technical breadth shows the overall posture to adopt. It allows easy drill down to find low risk trade setups. Weekly finder technical breadth, last week it was very red, very red, magenta. So bearish that I expected a recovery. It was oversold and that recovery happened. Now it is bullish across the board. Strength is neutral but otherwise bullish, and overall it is quite bullish, 67% bullish. That is the weekly picture. The recovery that I anticipated took place on Friday though. Again, QQQ made a new all-time high, but under the hood we can see across the board all categories are more bearish than bullish. So the stocks that were doing well earlier may come down. It's possible that the weakness will continue. Market level summary: the most important trading decision is whether and where to buy or short and whether to stand aside. My conclusion is to be very cautious about stocks at a high price level. Those with weaker fundamentals may be going up just because they are AI stocks or their name has AI associated with it. More so because we have a confirmed Hindenburg if we combine Nasdaq NYSE signals together. We have to be cautious about the market from now onwards. At the same time, as I said before also, there are great fundamental stocks at a lower price point giving a buy setup as of Friday's close in strong industries with high dividend yield. those can give buy opportunities as well. I'll try to find such stocks using live systems later today. Review of last week's trade ideas. I shared only one stock last week, that was WK. It hugely went up last week, and I mentioned that this huge gap move was too wide for me to buy the stock using the daily candle. That is the usual Q guidelines. So I was watching the stock every day of the week. Every day it came down after the open, came below early range low in the pivot chart. So it did not give me any entry opportunity. So I was watching it throughout the week, did not give me any entry opportunity. So I'm still watching it. It stopped at one of the direction lines. All the direction lines here are still uptrending. If it creates a higher low from here or here, any of these places, and if the industry continues to remain strong, then I may not mind taking a long position in the stock. Last week I did not trade it because it did not give me a buying opportunity, entry opportunity using the pivot chart. This week's trade ideas, though I am thinking that because of the Hindenburg market may come down, I also showed that all the market ETFs have support nearby. It is not easy to short those market ETFs. And I think there are great fundamental stocks at a lower price point. We saw under the hood many stocks came down. Let's try to find a buy setup, but to be on the safe side, let's also see if we can find a stock that is in an accelerating industry, hopefully with some dividend yield also. If we are thinking of finding stocks in accelerating industries, then we'll start with top-down analysis. From Q Edge dashboard, we go to the industry scorecard, and instead of choosing industries that may be strongest, I'm going to choose industries that are most accelerating. Which are these? They are the strongest in terms of pace one day, that is Friday's acceleration, though you can see some of them are not necessarily strongest in score. So in that way, I'm looking for turnaround industries. Q Edge in that way allows you to look for turnaround industries as well as industries that are strong, and some of them may be both. Like here we have one of the strongest industries and also one of the most accelerating industries. So it is turning around and it has already become one of the strongest. In any case, for this analysis, let me look at the top 20% of the most accelerating industries, and I am going to look at the fundamental scorecard of only these industries of all liquid stocks. These are the stocks. Let's find stocks that are up on Friday, find stocks that are either undervalued or having high earnings growth, that is green 1 star. Let's find those. So I'm left with only 159 stocks. Out of thousands of liquid stocks, I have only 159 stocks that are fundamentally strong in terms of either valuation or earnings growth or valuation, and they are in accelerating industries. But how many of them are having possible trade setup? Using one click we can find that out. Only 19. Am I going to look at these 19 charts, I could do that. But what I want to do now, I want to cross-reference again back to the fundamental scorecard. Why? Because all these 19 stocks are either undervalued or high earnings growth. But is there a stock that is more than that? Is there a stock that is 3-star, that is both undervalued with high earnings growth? Or even better, is there a stock that is diamond stock, that is undervalued with high earnings growth as well as high revenue growth? That's why I came back to the fundamental scorecard. Instead of looking at all the 19s arbitrarily, let's look at the strongest fundamental stocks. There are only 2 stocks left, PFS and PRGS. Both of them are undervalued. Both of them have high earnings growth. PFS has a massive earnings growth of 600%. Both of them have high revenue growth. And remember, I was also going to look for stocks with high dividend yield. Left with only one stock. PFS has 5.3% dividend yield. I could look at the stocks chart, but before that, why not we look at its one-page scorecard. Even better, undervalued, went up, high dividend yield, analysts are bullish, profitable company, 98% of peer stocks went up on Friday, regional bank stocks. That is not because of mega caps. Regional banks are not necessarily having mega cap stocks, and you can see also from this color code here, PFS has the ticker symbol in yellow color, so we know it is a mid cap stock. That's good because I showed mid caps were underperforming and they may start to go up now. I'm not going to open the chart yet. Let's look at its industry scorecard before that. I know it will be one of the most accelerating industries. That's how I started the analysis. But I want to now see this particular industry's entire scorecard across 12-month period to Friday. Now I see it is not only one of the most accelerating, but it is one of the strongest as well. So it's turned around and it has already become one of the strongest. Now is the time to look at these stocks charts. And if the charts of weekly daily confirm a low risk buy setup, I think this will be a good buy setup. Weekly is neutral in color. Daily is in a clear uptrend. Pull back to support. What support? White direction line, yellow direction line, trend line support. Displayed bullish indecision cluster. As of Friday's close, it bounced up from the trend line support, and I think it has given a pullback by support, pullback by setup. Let's check that out. We know it has one buy setup. Let's see what buy setup it has. Yes, it has a pullback buy setup on Friday. It is a great dividend yield, so it may be worth buying the stock for its dividend yield also. One way to trade these stocks, for me at least, is to sometimes I buy the stock and sell out of the money call. So I may get the dividend if I am not called out, and if I am called out, I still get money from the move till the short strike of the call, by which point the call will have 50 delta. So even beyond that, I'll continue to get some money, and I get money from the premium also. If I don't get assigned, I get to keep the call premium, and I also get to keep the dividend yield. So let me have PFS, a defensive strategy, because it has dividend yield also, as my stock pick of this week. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today, just as you would almost every other day. And by the way, if you follow me on Twitter X, you would notice that I am also starting to look at some potential short candidates, but not ready to short yet unless those stocks continue to go up next week. And if the market starts to weaken, there will be many shorting ideas coming up also. You may keep an eye for both buying and shorting ideas in the current market situation. Thanks a lot for joining. I look forward to seeing you in my next webinar. Have a great weekend, and as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.